Hello everyone. Today we're going to look at multiple funds in the ELSS category. So, what is ELSS? ELSS stands for Equity Linked Savings Schemes. The main benefit of these types of funds is that you can get tax rebates under the Section 80C up to 1,50,000 rupees. One main thing to be aware of these types of funds is that it has a lock-in period of 3 years. So if you were wondering what's the catch, I think that's the answer here. So it has a lock-in period of 3 years. If you think that that's a long time, so you cannot redeem any of your funds for 3 years, right? So if you think that's a long time, this is something you should be aware before investing in these types of funds. So in this video, we will start off by analyzing the top five in terms of AUM, top five mutual funds, that is the ELSS funds, using asset comparer. Then there is one honorary guest in the ELSS category that I will introduce. It's a new fund. And we will also compare these ELSS funds with its appropriate benchmark, which is the Nifty 500. So let's start off by analyzing the top five ELSS funds in India. Let's start off just with simple performance analysis, and then we can go into the other interesting aspects of these types of funds. So what we see here is the Mira Asset ELSS fund has consistently has outperformed all its peers since 2015. And the second fund that has done well is the DSP ELSS fund. When you come to the risk versus return, I think it is kind of when you look at the performance itself, mostly it kind of replicates what you are seeing in the performance in the risk versus return tab, right? So you can see again the Mira is on the CAGR side, it's on the higher end. Also, the second highest CAGR is the DSP ELSS fund. So both is on the high volatile end when you compare this to the Aditya Birla ELSS fund, which is comparatively lower return but also lower risk. Then now let's move on to the breakdown by assets. So these are called equity linked savings schemes. So in the name itself, you can expect that all these have equity exposures, right? So all these funds are expected to have a maximum of 80% in equities, right? So that's the maximum limit like you can have. Not the maximum limit, it has to have at least 80%. And you can see here, all the funds have about 90% in equities, right? Except the HDFC one, which has about 8% in the others category, which includes cash and also stuff that doesn't come under equities and bonds. Now, something not a concern, but something to point out here is all these five funds are heavily exposed to the financial sector, especially if you take HDFC ELSS fund. It has about 40%, right? 40% of your portfolio, that is the fund, is exposed to the financials, which seems to be a lot. Not a cause of concern, but just wanted to highlight the heavy exposure towards the financial sectors. Now, going into the interesting aspect of the nitty-gritties of this portfolio is the fact exposure analysis. So you can see here almost all the funds, right? Not almost all the funds have an exposure of close to 1, except the Aditya Birla, which has about 0.8. Almost all the funds have close to 1. One interesting thing to notice here is all the funds have size exposure. That means that they have mid cap and small caps in their funds as well. So something to look at. Now let's look into what are they charging, what these funds are charging, right? So from an expense ratio perspective, I think almost all of them are, I think, greater than 0.5%. and the higher end it's 1.08%. Also, I have to tell you that I'm comparing only the direct funds here, right? So 1% for a direct fund, it seems to be a lot when you just look into the expense ratio aspect of it, right? And in terms of the risk versus return, which we already saw, you can see that in terms of CAGR and volatility, when you combine them together, you get the Sharpe ratio. In terms of Sharpe ratio, again, Mira Asset, ELSS fund, is on the best side. It's on the higher end, right? So you have a Sharpe ratio of 1.37, followed by DSP. So our story of the outperformance story in the first chart that we saw, it follows again in the Sharpe ratio that we are looking at here. Now, I think the next thing here is this is a equity. All these are equity products, right? So you can expect close. I mean, all of them have like zero point 0.9 correlation, right? So it doesn't make sense to have two equity linked saving scheme products in a portfolio because almost all of them are correlated right here. So you have 0.93, 0.97, all of them are correlated here. And as expected, the correlation between stocks and bonds, all of them are uh, have close to one correlation to stocks, right? Because it's an equity product. Now, let's quickly look into the style boxes and see where these funds, the fundamental characteristics of these funds are, right? I will quickly change the benchmark to Nifty 500, which is the right benchmark as per our suggested benchmark algorithm. Also, when you look into the fact sheets of all these funds, that's the benchmark they have chosen for their fund to compare against. So, from a valuation perspective, all the funds are on the some of the funds are on the lower end, and the Axis ELSS fund is slightly on the other end, but from a valuation, from a P perspective, P ratio perspective, most of them are close to the lower end, but some of them are on the higher end, right? And from a market cap perspective, also all of them, all the five funds are on the high market cap side. And you can also look into the growth potential momentum. From a growth, it is kind of similar to the Nifty 500 benchmark that we have chosen because all of them are revolving around this zero ranking here. Now let's quickly move on to the constituents, like the number of funds, the number of stocks in all these funds, right? So you can see, Nifty 500 has 500 stocks compared to all these funds which are on the lower end compared to Nifty 500, but still diversified enough because you still have 88 stocks here. I think HDFC is on the lower end, which has 49 stocks. So as I promised, I will introduce the honorary guest. There is one new fund that I would introduce. Also, before that, let's quickly compare these funds against the Nifty 500 benchmark to see whether it has outperformed or what's the performance like compared to a simple benchmark which is charging lower expense ratio. So let me just quickly remove the Aditya Birla one since now it is not does not perform well compared to its competitors. So I will replace this with Nifty 500 here. So let me take the Motilal Oswal Nifty 500 direct fund and see how many funds out of these four ELSS funds have outperformed the Nifty 500. So I think DSP and Mira, they have outperformed. I think we have rebased the date to 2019 here because of the shorter history of the Motilal Oswal Nifty 500 fund, right? So three funds have outperformed Nifty 500. So one is the HDFC, Mira, and the DSP ELSS funds, and Access ELSS it has underperformed Nifty 500. And if we quickly go to the expense ratio, if you can see that this is charging way lower, right? So 0.2%. So it begs the question: why should someone look into the Axis one for an expense ratio of 0.77% when you can buy just a benchmark, a passive benchmark, without not thinking about too much? Now, as promised, let's introduce the guest fund here. So I will remove the underperforming fund, which is the Axis one, with the Quant ELSS fund, which is our new guest in this analysis. So I will take the direct version here again. So the interesting fund is, I think, the Quant ELSS has got a lot of traction, mainly because of the chart that you're seeing here, which is the performance, right? It has outperformed all its competitors in a huge way, right? Even if you take in terms of risk versus return, it seems to be on a different planet, right? And obviously, it has outperformed the Nifty 500, that is the passive benchmark. It has outperformed and also outperformed all its competitors in a huge way. One thing I want to point out with regards to the Quant ELSS fund is its concentration. And what I mean by that is the number of holdings in this fund. It has only 30 holdings, which is super concentrated, right? It is less than Nifty 50, right, which has 50 stocks. So that is something to be aware of, because when you compare this fund against the other ELSS funds, you can see that all of them have about 80 stocks, right? So HDFC being on the 50 as about 50 stocks, right? So that is something to be aware of. And quickly reviewing the Quant ELSS, it is charging about the on average 0.65%, right? So I think the ELSS category seems to be around 0.6% on average, right? So you're paying 6.65% and also outperforming the passive benchmark, not to mention all its peers as well. I think that sums up this video. Thanks a lot for watching. See you next time.